At a time when Tesla stock is trading at a rather discouraging price and currently down almost 50% in the past 3 months, do you think buying more Tesla shares is a good idea? Tesla's stock price is getting scary, at least for the regular investor who ordinarily had expected to make some profits from their investment. But for certain unexplainable reasons, the stock price keeps dropping and dropping at a significantly fast rate. And to make matters worse, Tesla CEO Elon Musk is reportedly selling more Tesla shares. Do you still intend to hold on to your Tesla shares? Hello everyone and welcome back to Tesla Tomorrow. Tesla's stock price has been dropping, and many people attribute this to Musk's new deal with Twitter. But the thing is, most investors are unable to separate the performance of the stock from the performance of the company. Tesla is nowhere near going off the market, and its long-term fundamentals are looking great. It is probably only a matter of time before the stock price starts going up the chart again. There are several possible reasons why Tesla's stock price will soon skyrocket, and here's a quick look at some of them. Pay very close attention to the following. But before we start, if you like this type of content, make sure to hit that like button, subscribe to our channel, and turn on notifications to stay up to date on everything happening with Tesla. First of all, Tesla delivered a record 100,291 vehicles in November from its Shanghai Gigafactory because of expanded capacity and cut in prices. According to data by the China Passenger Car Association or CPCA, deliveries from the Tesla Gigafactory rose 40% from 71,704 units in October. The automaker also surpassed the previous record of 83,135 vehicles in September. Pandemic and lockdown issues disrupted economic activity in China earlier this year. The official Manufacturing Purchasing Managers Index fell to 48 in November, the lowest since April, after remaining below the 50 mark for a second consecutive month. Tesla's factory expansion came after the plant was forced to suspend manufacturing due to a 2-month lockdown following a resurgence in COVID cases. But it seems to be catching up on this really fast. While the CPCA did not reveal the number of vehicles exported, Fei Cheng, founder of Shanghai-based EV news site CNEV Post, stated that Tesla's capacity expansion has enabled it to flexibly arrange production based on orders that it receives, and it remains to be seen whether a consumption downgrade will affect Tesla's operations. Also, despite the seemingly difficult months, Tesla's Q3 was still a record-breaking quarter for the car company, even though it didn't meet certain expectations. It seems that despite the many hurdles that electric automakers are facing today, there's no slowing down for Tesla. The car company has started on a race to keep dominating the EV industry, and it will likely continue on this path. Tesla announced that it made a record high amount of deliveries in the third quarter of this year, sending out 343 electric cars to its customers. While the EV automaker decreased deliveries and profits in the first half of the year, the end-of-quarter push to meet aggressive delivery and production goals have exceeded expectations. Tesla plans to increase production significantly in the last quarter of this year as well, and major efforts are being put in place to ensure that it reaches its target on car production for this year. The automaker's net income for the third quarter alone was $3.3 billion, nearly double the $1.62 billion it earned in the same period last year. The car company had said that profits were squeezed by increase in raw material costs, issues ramping up production at its Germany and Texas factories, as well as 4680 battery cell production. Tesla also cited a strengthening dollar as another factor in its third quarter results. Another point is that there have been major ramping in Tesla's factories globally, even the new ones in Berlin and Texas. Tesla has plans to increase capacity at its factory in Germany to a point where around 12,000 workers will occupy the plant. At the moment, Tesla is making around 1,000 EVs a week, and the Berlin plant is only manufacturing the Model Y. However, the plan is for the facility to produce 500,000 cars annually, and in the long term to also produce the Model 3. Elon Musk has said that a global recession is coming and that could last into the spring of 2024. But Tesla plans to ramp up production at the company regardless. Do you think this is a good idea? Let us know in the comments section below. Although production at Tesla's Gigafactory in Texas has been constrained by the availability of the more efficient 4680 cells that comprise its new battery architecture, the automaker's partnership with Panasonic will possibly help to resolve this bottleneck in early 2024 when it starts producing the advanced cells at the battery maker's $4 billion battery factory it's building in Kansas. Estimates by Wedbush analyst Dan Ives states that Tesla lost 50,000 to 70,000 units in production between April and May. And some other analysts expect economic activity to weaken further in the coming months and even in the first quarter of 2023. However, in August, Tesla completed an upgrade of its Gigafactory in Shanghai, increasing capacity by 30% to 1 million cars a year. With a major ramp-up in its factories, Tesla may sufficiently reach expected production levels. In similar news, Tesla has started deliveries of its semi-truck to actual customers. In the company's third-quarter letter to shareholders, Tesla reiterated much of its guidance to its semi-truck production target of December and its plan to achieve a 50% annual growth in vehicle deliveries. Finally, these trucks are beginning to hit the roads with major deliveries to companies like PepsiCo. There are many other cars that Tesla is expected to release, such as the Roadster, the Cybertruck, and its long-awaited low-priced EV that will cost less than its Model 3 and Model Y. While Tesla had provided few details on its launch plans for Cybertruck, besides only saying it has made progress on its industrialization, it is expected that production would begin very soon, probably by next year. Aside from that, these cars are coming with incredible features. They may be reaching customers faster than before, as Tesla is working in reducing the wait time for its cars. Recent brokerage data show that Tesla added to its electric vehicle inventory in Shanghai at its fastest pace ever in October, at a time when automakers and investors are bracing for a downturn in the world's largest car market. This is in contrast to the company's operations a few months ago when some buyers reported wait times of up to a year. There are two ways that this could have happened. Either Tesla has received much better production times to keep its wait times lower, or demand has slowed for the vehicles. But it is most likely going to be the former, since Tesla's demand does not seem to be declining in any way. Tesla's wait times are considerably shorter now. Its Model S or Model X Plaid have estimated delivery dates from November to December, as do the performance variants of the Model 3 and Model Y. With reduced wait time, customers can buy Tesla cars without fear of waiting for an incredibly long period of time before getting their vehicles. And this could foster increased demands for the car company. In the past months, Tesla's EVs have earned spots as the best-selling car in several of its markets. The Tesla Model Y took the top spot on the list of best-selling cars in Europe in September. Over the years, Tesla's vehicles have often become the best-selling vehicles in certain European markets. But it never topped the list of best-selling cars in the entire European continent until now. According to new car registration data released by JATO Dynamics, this is the first time that Tesla's sports utility vehicle has led the rankings in Europe, as 29,367 Model Y cars were registered in September, up 227% from last year. The Tesla model took this position from the Pugo 208, which came in second, and Renault's Dacia Sandero came third in the September best-selling car rankings. This already glaring proof of Tesla's strong demand can be further strengthened by the price cuts in some of Tesla's EVs. On October 24, Tesla offered price cuts on its Model 3 and Model Y vehicles assembled in Shanghai to bolster sales. The entry-level Model 3 was marked down by 5% to 265,900 yuan, approximately $38,082, while the starting price of the Model Y sports utility vehicle was cut by 8.8% to 316,900 yuan. At lower prices, people may become even more encouraged to buy Tesla cars. The question is, will you be one of them? Share why or why not in the comments section. No doubt, there is a good chance that at least some buyers have decided to skip Tesla and lease or buy a competing EV. There are obviously many reasons why this might happen, such as the high price of some Tesla's products along with the increasingly competitive EV market. However, it is fair to say that Tesla remains the most popular EV brand today, and a majority of people who want to buy electric cars actually want to get a Tesla. Despite the rather discouraging market, Tesla's fundamentals is moving at a fast rate, and no one is coming close. Do you also think so? Let us know your thoughts in the comments section. And don't forget to tell us what your valuation on Tesla is. If you would like to know what Tesla has been up to this past few days, go ahead and click on the next video on your screen. See you there!